both domestically and in international markets. India's Reliance Industry announced that it will sell a 20% stake in its oil and chemicals business to Saudi Aramco in one of the largest ever foreign investments into India. Reliance chairman Mukesh Ambani said the deal values the business at $75 billion, including debt. And as I was just saying, Saudi Aramco is definitely hitting the headlines today. But in order to delve deeper into the topic, I would like to bring to the show Youssef Alshammari, Editor-in-Chief, CMarkits. Good evening, Youssef, and thank you so much for joining us.
Hello, Alexandra. Very delighted to be with you.
Well, Youssef, we have so much to talk about, but I would like to start with Saudi Aramco. First of all, why do you think is this decline in the net profit? Is it attributed to the lower oil prices and the so-called, let's call it small crisis in the energy market?
Certainly, as you the oil price compared to the previous year has not been the same. It was much higher last year. It was mainly above $70, reaching even $80. And this is a major reason, because if you look into the investment of Saudi Aramco, it exports or it produces around 10 million barrels a day, and they have less investment in the petrochemical or the natural gas. So pretty much the revenues are largely dependent on the oil price. And I believe this is the main reason. However, if you look into the decline of the oil price compared with the reduction in their revenues, they've actually been doing pretty well. So they actually minimized the reduction in the earnings. And I believe they've taken some initiatives in terms of reducing their capital, the capex, their operating costs, the divestment initiatives, and I believe in this way they could have minimized the impact of declining oil prices in the first half of this year.
So they are not crises in the company, not that kind of problems.
Well, I don't think Saudi Aramco have had any crisis, and because it's all about the oil markets, that's where the company is operating its business. Look, just last year they have made an initiative of acquisition of SABIC of about $70 billion, and this is another factor of that we need to take into account when considering the earnings of the company of the first half of this year.
Youssef, let's talk about their new adventure, if I can call it like that. This 20% stake in in the India's Reliance Industries. How do you read this movement? How do you interpret this?
It's a very smart move. In fact, the 20% acquisition, which is currently, by the way, it's an early stage. So Saudi Aramco is proposing, and there is still negotiations that will have to be both sides will have to agree on. But it's a stake of 20% that will include oil refining. It will also include the oil through chemical processes. And as you know, India would through this deal they will import 700,000 barrels of oil a day. And through this acquisition, Saudi Aramco will guarantee the imports of India as a guaranteed customer. So, in addition to the diversification initiative by Aramco, they've been very much working hard to establish initiatives in oil to chemical. And Reliance has been a leader in this business. So, in this way, they achieve two targets. One is guaranteed oil imports by Indian market, and in addition to the oil to chemical projects, in which Reliance has been doing very well.
And Youssef, can we expect an IPO in the following year?
Well, absolutely. I think the initiative that we have seen today by Aramco announcing its result, it's the first time in the history of the company. And I believe this is the first step in terms of that shows that the company is serious about moving ahead with its IPO plans. There have been some media reports published recently that the Saudi government is planning to advance the IPO in the beginning of 2020 instead of 2021. And I believe because the company, according to official statement from the company today, is that the company is ready and the time is a matter of the shareholder decision. So I believe we could see an IPO in 2020.
Well, Youssef, this is fantastic, really, but let's focus for a second on the energy market or the so-called oil market, because we did see extremely low prices in the last period of time, in the last few months, despite the fact that OPEC rolled over their output cuts for the following few months. Do you believe that we're going to remain at these price levels till the end of the year?
CMarkits, we still see a declining U.S. stock because oil markets has been very much largely affected by the United States inventory, and the withdrawal of inventories over the past weeks has led to has made actually the markets a little bit bullish, driving the prices to above $60. However, the main concern for the market now is the U.S.-China trade deal, and by the announcement of President Trump of additional tariffs on the Chinese commodities, that has actually been the major reason for a decline in the oil price. However, we still think that prices could be within the range of $60 in the towards the second half of 2019, and we also believe that prices could even reach $70 towards the end of 2019. That's in the fourth quarter of 2019.
Wow, $70 per barrel sounds really ambitious.
Well, if you look into the recent statements by Saudi Arabia, that in terms of curtailing oil exports in order to drive the prices up, and that's why we still see a bullish market, given by due to the actions and decisions taken by OPEC, especially by Saudi Arabia.
And what is your opinion regarding the demand situation?
Well, we still see a demand that is not very much rising. In the second, for example, this year we see a demand of about 890,000 barrels a day demand. Totally, that's the average demand for 2019. And in fact, this is very low compared to the previous years. Our view compared to the IEA, to the EIA, and the OPEC, at the beginning of the year, they have shown a demand of above 1 million barrels a day. That's about, they actually showed of about 1,300,000 barrels a day. And then they slashed that demand, and now it's about 600,000 just in the second half of 2019. But our view compared to the views published by the IEA and OPEC and BIA has been fixed. We have not really changed our forecast, and we still see an average demand for throughout this year of about 890,000 barrels of oil a day. However, when it comes to next year, we think that the demand could rise and could reach 1 million, slightly increase to about 1 million barrels a day. However, there is also some uncertainty to 2020 because OPEC deal is until the first quarter of 2020, and if there is a decision in the end of this year about extending the deal towards the second half of 2020, then we think that that will support prices and keep because if prices decline, that could freshen up demand and drive actually demand up. So that's what we are still uncertain about, but we see a demand next year to be slightly higher than the demand this year.
Well, Youssef, let me ask you one last question regarding the energy market. How important is China and the U.S.-China trade tensions for the oil price, in your opinion?
Well, of course, if there is a conciliation between the U.S. and China, this year, we think that will act positively on the market and will drive demand and also support prices. So if this is currently the major concern for the market now, and we hope that the two countries will agree on a deal and in 2019 before we go to 2020.
Well, Youssef, actually, I also wanted to ask you, aren't you surprised, or better, how do you explain those low prices of the oil, considering the tensions around the Strait of Hormuz between Iran and the US and now Iran and the UK? I mean, isn't it surprising considering what's going on? Of course, in the last few days, we didn't have major headlines and new tankers seized by the Iranians or the UK or the Britons, but still, I mean, there is a lot going on there. I mean, how is it possible to have such a low prices considering the tensions in the area?
Yeah, absolutely. What does that show? It shows that the market is oversupplied. And that's the reason why we are not seeing, because if the seizure of the oil tankers in the Strait of Hormuz and actually the muted response of the oil market shows that the disruption in these supplies has not really affected the market, because the market is well supplied and could be even oversupplied. And given by the high growth in the U.S. Shale oil, this is actually the main reason why we have not seen really a major any significant response from the oil market so far. However, if there is any shortage of supply given by the slow production of U.S. From the United States, then the situation in the Strait of Hormuz will become important. Of course, that's for countries that are willing to ship through the Strait of Hormuz. But look, for example, to Saudi Arabia now. It's building a major pipeline from east to west that will have a capacity of 7 million barrels of oil a day. And this is actually equal to the export capacity of the kingdom. So then the Strait of Hormuz will become of a less importance to, for example, to countries in the region, and most important to the Kingdom of Saudi Arabia.
Well, that's really, really interesting. Thank you so much for breaking it down for us, Youssef Alshammari, Editor-in-Chief, CMarkits. Thank you for joining me.
Always a pleasure, Alexander. Thank you for having me.
Have a great evening, Youssef. Well, let's go ahead and talk about one really not very happy story. And of course,